Welcome to this special analysis from Talk Tickers. So, Zoom just dropped an earnings report that absolutely lit a fire under its stock. The big question, of course, is why? Today, we're going to break down the key numbers and, more importantly, the AI strategy that has Wall Street sitting up and paying very close attention. All right, let's dive in.
And here it is. The market's reaction was, well, it was decisive. We're talking a massive jump the very next day. And get this, trading volume was 5 times higher than normal. You know, that's not just a little bit of positive sentiment. That, my friends, is a stampede.
So, what was behind this incredibly bullish reaction? I mean, the headlines pretty much say it all, right? They topped estimates and raised their outlook, all because of this AI boom. It's a classic 1-2 punch. Great results now, and an even more promising future. So, okay, let's unpack the results first.
Okay, Section 1. Zoom's bullish beat and raise. At the heart of all this excitement is something Wall Street just loves to see. It's called a beat and raise, and it's exactly what it sounds like. They didn't just beat the current expectations, they also raised their forecast for what's coming next. I mean, that's management basically shouting from the rooftops that they're confident.
So first up, the beat on revenue. They pulled in over $1.2 billion, and that was about $17 million more than what the analysts were forecasting. But here's the real kicker. This was their fastest revenue growth in 11 quarters. That's almost 3 years. Something is definitely changing here.
And you know what? The story on the bottom line on profitability was actually even better. Their non-GAAP earnings per share, which is really just a key way to look at their core profit, well, that beat expectations by a whole 16 cents. That's a big beat in the world of earnings.
Look, this wasn't just a narrow beat on one little thing. It was a total clean sweep. As you can see, from revenue to both GAAP and non-GAAP earnings, every single key number came in ahead of what was expected. You know, that just screams one thing. This is a company that is executing incredibly well right now.
But here's a really critical question. Where is this growth actually coming from? And the answer is right here. The enterprise segment, serving the big companies, now makes up 60% of their total revenue. This is huge. It shows they're successfully moving their business towards those more stable, higher value corporate contracts. That's a very healthy sign.
All right, Section 2, the AI growth engine. So we've seen the great numbers, but the most important thing to understand is why. Why were they so strong? And believe me, it wasn't just about cutting costs. The answer, which management hammered home again and again, really boils down to 2 letters, AI.
I mean, just listen to the CEO, Eric Yuan. He said their AI Companion's monthly active users have grown over 4 times year over year. Think about that. Quadrupled in a year. This is not just some popular little feature they added. It is rapidly becoming a core engine for the entire business.
And we're not just talking about getting a quick summary after your meeting ends. No, Zoom is weaving AI into the entire life cycle of a meeting. We're talking about prep before the meeting, real-time assistance during it, and then automating all those tedious follow-up tasks afterward. It's becoming a fundamental part of the workflow, which is exactly what you want to see.
And this right here is their absolutely brilliant monetization strategy. So they give you the standard AI companion for free if you have a paid account. What does that do? It drives massive adoption, right? Everyone starts using it. But then they offer a really powerful paid upgrade, the custom AI companion. This is the one that can plug into all of a company's internal data. It's a classic freemium playbook, just perfectly applied to enterprise AI.
Next up, Section 3, Enterprise and Platform Momentum. Because you see, AI is really only half the story here. The other huge factor is that Zoom is finally, successfully becoming so much more than just a video meeting app. The momentum they'd have across their entire platform is just undeniable at this point.
I mean, just look at these numbers for their high-value customers. For their contact center product, the number of customers paying over $100,000 a year, it nearly doubled. And for Workvivo, their employee experience platform, that same group of customers grew by an astounding 142%. This is where the real growth, the real acceleration is coming from.
Now this is really interesting. This reveals a crucial dynamic. Zoom isn't just out there finding new customers for its contact center. No, they are actively poaching them from their rivals. Get this. Their top 10 biggest deals this quarter were all displacements of a competitor. And we're talking about other major cloud players. This is market share being stolen right before our eyes.
And these high-profile customer stories really paint the picture. You've got F5, a company that left and is now coming back to Zoom. You have HubSpot, which is expanding and going all in on the entire workplace platform. And then you have a big global firm like ATPI choosing Zoom's contact center specifically over competitors because of the integrated AI. I mean, you can't ask for more powerful validation of your strategy than that.
So all of this strong performance, this incredible momentum, it all leads us to our final section, the next call. What does all this success actually mean for the stock and the business going forward?
So what's the call for next quarter? Where does Zoom go from here? Well, based on everything we've seen this quarter and the huge tailwind that AI is providing, here's our take.
We fully expect this momentum to carry into the third quarter, which probably means they will meet or even exceed their own guidance again. We think the positive price action will continue, but the key catalyst, the big date you need to circle on your calendar, is Zoomtopia in September. The company has basically promised they'll be making major AI announcements there, and that could be the next big thing to move the stock. And because of all that, we are assigning an outperform rating to Zoom. It just seems clear that their strategy, embedding AI across this expanding enterprise platform, is working. It's successfully re-accelerating their growth, and as we saw, it's winning them some serious market share.
And that's our breakdown. Just a reminder, of course, this is not financial advice.